So again, if we stay on Fed day, so again, we didn't get the quarter point. We did get, Powell talking tough, like, hey, we're going to go higher, data dependent, blah, blah, blah. Um, I have shared since you've watched the channel that I think they're done. They're at the terminal rate. Uh, but I also think they're not going to cut all of next year, which would be the longest time. So it'd be about 18 months that they've held rates. I think the current length longest is 11 months. So you were there, you were in 2008. Um, how crazy is my opinion? Is it just off the wall? Because anything's possible, but is it totally off the wall?
So I think my sense, so first of all, I'll tell you what's priced into the market. So the market is largely in agreement with you that this is the terminal rate, and they're going to hold it at least for the next several months, let's say until mid-year next year, and then there'll be
Mhm.
cuts in the third and fourth quarters. So
Right.
your view is a little bit more hawkish, as we would say, than the market. So I think so. First of all, I think definitely that the terminal rate is reached, and the reason I think this is that the Fed has been making noises
Mhm.
saying that, we see the 10-year yield going up a lot. That's tightening financial conditions. That's slowing the economy down. And to some extent, that's going to substitute for rate hikes. So the market has kind of hiked for us. We don't really need to hike as much. So maybe we can stand pat and just see how things go. Now, my personal opinion is that there's actually, I think there's a good chance that the Fed actually cuts maybe in March of next year. Now,
Okay.
that's not connect consensus at all. The consensus is with you, with your view. But I think one thing to keep in mind is that, well, there's a couple things actually. So, the Fed looks at the world through the lens of real interest rates.
Right.
So, what are real interest rates? It's nominal rates minus inflation. Now, I can look at an interest rate and say 5%, but I can't really know if that's high or not unless I know what inflation is. 5% interest rate, but if we have 10% inflation, 5% is a steal. So we really
Right.
have to take into account inflation to get real rates. Now, inflation is still high, but it's trending lower.
Mhm.
So if we keep this trajectory next year, we'll have inflation trend lower, and real rates, unless you cut nominal rates, are going to trend higher. Now, I don't
True.
think that makes sense, right? We don't want to be raising real rates even as we get inflation under control. That
Okay.
doesn't seem to make sense. So I think it would make sense to cut rates just a little bit so that the real rates stay constant. And
I like
that's
that.
one thing. The other thing I think is worth thinking about is that, you know, the economy, okay, the US is fine, but globally things are not doing well. It's
Mhm.
a big slowdown in China, the slowdown in the UK, slowdown in the Eurozone. I think that's going to feed through and impact the economy in the US. Now, the US is not super connected to the world, but it's still somewhat connected. So maybe inflation could slow faster than expected. But again, we'll see. But
Yeah,
I
absolutely.
think I feel very comfortable saying though that this is a terminal rate.
Yeah.